Here we have the hourly price chart for Apple Incorporated, stock ticker AAPL. Here we can see that the stock has managed to recover many of the losses that were posted during the prior trading session. This is a bit of an interesting turnaround here due to the fact that it seems to have come without any, noticeable support zones in place. If we're looking at the prior trend move here, we can see that recent lows came in at the June, this would be June 28th low, which posted at 210.30. And then this would be followed by the all-time highs for the stock, which posted at 233.08 during the July 10 trading session. If we're using this as the dominant trend move here, we can see that share prices did manage to break through the 20-hour exponential moving average. That's this yellow line here, as well as the 23.6% Fibonacci retracement of this broader trend move here. That would be the red line, red zone here. Yeah, we did break through both of these levels, and then we did manage to find support just ahead of the 225.80 mark. And it's interesting because this kind of happened in anticipation of upcoming support levels, which were found just a bit lower here. As we can see, the level that we were pointing out yesterday would have come in at roughly 224.50. So we can see here that prices did manage to find support about $1.30 above this level. And it's a bit surprising here because there's really no support zones in place that are showing at this level. I mean, other than the fact that the 225 mark is a psychological level. You can kind of suggest that there would have been some buying there in anticipation of a move higher. But there really wasn't much of a technical signal in this zone to suggest that prices were likely to bounce here. So currently, the real question is whether or not we will be breaking these prior all-time highs at 233.08. If this does occur, then it would suggest that this current trend was not finished. But if we do see a failure here, the main level to watch on the downside is going to come in at this 225.80 level. Because the fact now that we have a historical support zone in this area does suggest that we would be likely to come in contact with this 38.2% Fibonacci retracement relatively soon. This does fall in line with some prior consolidation trading areas, as well as the 50-day exponential moving average. However, this moving average is starting to now rise above this area. So depending on when this occurs, we might actually be looking at the 100-hour exponential moving average, which is this purple line here. But it would depend on how quickly this actually happens. So here, it is clear that there was a very broad sell-off in the market yesterday. There were many stocks that were falling victim to this bearish activity, this downside selling pressure. We did see major lows forming in NVIDIA, Meta Platforms, Tesla. All of these stocks broke major support levels. So it is clear that there was a fair amount of selling activity that was being directed at the technology space in particular, but it was also present within the market as a whole. This was not one stock. This was not one sector. This was some fairly broad selling activity. And Apple did fall victim to this, just like many other stocks did. But what we are seeing here is a fairly strong recovery here. Probably in anticipation of this 225 level, which might have sort of brought some of the bulls back into the market, based on the expectation that there is a strong bull rally in place here. A lot of the underlying momentum does continue to be positive. We can simply see that here. And this was especially true since we saw this initial break through the $200 level, which was really coming from the bounce off of 190. That resulted in, really an upsurge in share prices. We can kind of point to that here. These movements were largely based on the worldwide, the aftermath, the news story of the Worldwide Developers Conference. And the market does seem to be overlooking a lot of the negatives that are currently present in this company. For example, major slowdown in Chinese sales are expected to be revealed in coming quarters. And in addition to that, overall sales in the iPhone are showing some evidence of weakness. In addition to that, there has been criticism of the company, which suggests that Apple's really not doing enough to work on its own AI applications. Um, it seems to, Apple seems to be more focused on working with other companies that already have AI in place. OpenAI would be the primary example here. And it's kind of mystifying. It's kind of inexplicable. Why wouldn't Apple be a bit more focused on this part of the market on its own? It's kind of strange to see this occurring. This is, arguably the most important company in the world. It really doesn't take much to devote some of this time and energy and investment to the AI space, given the fact that there's so much activity and excitement here in the broader market. Also, it's another opportunity for Apple to collect user data and to use that data to kind of enhance the user experience for its products. So it's kind of bizarre that this is not occurring, and then it's also bizarre that we're seeing such an upsurge in prices in spite of all these potential negatives. So, currently what we're looking at, if we're going to be actively trading this stock, we do have to watch for this 225.80 level. If we see a failure at the 233 all-time highs on a short-term basis, the next level to the downside would come in at 225.80. And then a break here would really force, a test of this 38.2% Fibonacci retracement, which rests just a bit lower. If we did see a breakthrough here, I would expect the retracement to continue a bit further, most likely to the 618 retracement, 61.8% Fibonacci retracement, which comes in just above 218. This would be 218.94. So, if we do see this area give way here, this could be a signal that a bit of a decline is ready to take place, and it would possibly even result in a double top formation just above the 230 zone. So there are some things to watch here. Underlying momentum does remain positive. We saw a prior break in the downside trend momentum, and then the development of a new uptrend to the top side. So, an upside break from here into the mid 230s is absolutely possible. There's really nothing stopping the stock necessarily unless we do see another major sell-off in the broader market as a whole. So here's the current market analysis for Apple Incorporated, stock ticker AAPL.